Given the data that you have seen, is there any reason to think a rate increase on October 28th is possible, or is October really off the table?
Well, you know, one of the things that principles I follow is that I do a lot of analysis, do a lot of thinking with my team in San Francisco, read a lot of the reports and briefing materials we get from our colleagues around the Federal Reserve. But the decision around interest rates and policy decisions take place at the meeting. And when I get to the meeting, I share my views and what I've learned, but I also listen to my colleagues, and we try to together come to a consensus decision. So what that decision will be really is going to be driven by what are those conversations and all the factors that we're weighing at the meetings in the future.
Well, what's John Williams going to tell them about his view?
Well, my view is basically on the employment mandate side. We've seen huge progress on the job market. Unemployment's down to close to 5%, close to what I think of as full employment. Inflation's running below our target, and that's a significant consideration. But I think we understand why that's happening, mainly due to the strong dollar, the decline in oil prices. And so I do see an economy that is strengthening. We're basically at one of our mandates, but still there are risks and uncertainties there. And I think the important thing to think about is it's not just about our first move to raise interest rates. It's really that I think we're going to need accommodative monetary policy for another few years. So even when we do start that process of raising rates, it's still going to be the case that monetary conditions are pretty accommodative and supportive of continued growth.
But do you think, would you vote, put it that way, for an interest rate increase on the 28th?
I'm not going to, again, speculate about what my views are for that meeting. Again, we start the process, really, of the deep dive briefings starts tomorrow for us, and I spent a whole week preparing for the meeting, and we'll get a lot of materials, and again, get to listen to my colleagues. So I'm not going to decide on that today.
Well, right now, as we speak, the 10-year note yield is 2.02%. If you were to vote for an increase in October, it would shock the markets. Is the Fed willing to do that?
I think what we need to do is focus on economic fundamentals, where the economy is, the progress we've made on our dual mandate goals, and where we see that economy going over the next couple of years. An important consideration is that it takes about a year or two for monetary policy actions to have their full effects on the economy. So we always have to be looking through the front window and not back in the rearview mirror and thinking about our policy decisions.
Well, interesting that you note that. Minneapolis Fed President Narayana Kocher-Lakota has suggested the slowdown we're seeing now in hiring and spending is really the long and variable lags in monetary policy taking effect from the Fed's decision to begin tapering way back in mid-2013.
Well, my own view is that the economy is still on a good trajectory. Growth is, in my forecast, continuing to be 2% or above that for GDP growth. I still expect continued job gains and unemployment to come down below 5% by late this year or early next year. So I still think we're on a good trajectory. I think it's actually a healthy sign that the pace of growth is slowing a bit, because if we kept adding jobs at the pace of last year and the first half of this year, we would be in danger of really significantly overshooting the mark. So my view is the economy is still on a good trajectory. I think some of the slowdown in jobs really is because of the strengthening of the dollar and other things or other factors. So I'm not so worried about the slowdown in some of the recent data. Again, it's supportive of continuing improvement in the labor market.
Well, the Atlanta Fed GDP tracker suggests we're going to see 0.9% growth for the third quarter. Is that too low? Do you need to see something higher in order to support the case for higher rates?
Well, my mantra on looking at data is not to get too caught up into the month-to-month, quarter-to-quarter movements, because there's a lot of volatility there. Q2 growth was 3.9%, way above trend, and of course there's some payback in the third quarter. And my view is that growth in the second half of this year will be about 2% at an annual rate. So again, on a good trajectory. But again, monetary policy takes a year or two to have its effect, so you don't want to get caught up in this month's data or this quarter's data. Stay focused on the outlook over the next year or two.
Well, has your forecast for 2016 for the first half or for the entire year come down with the slowing in growth this fall?
No, in fact, my forecast in terms of the unemployment rate has actually come down a little bit, because we've seen unemployment come down quicker than we expected, and also other indicators of the labor market have continued to improve at a really healthy clip. My view on the GDP growth next year is for growth to be around 2 to 2.25%. That hasn't really changed. And my view is inflation will come back to 2% over the next couple of years, and that really hasn't changed. Obviously, the near-term inflation outlook has been held down by the strength of the dollar and oil prices.
Well, where does it leave you in terms of having a decision to raise rates by the end of this year? You have suggested that you sort of expected that to happen if the data come in as you forecast.
Well, again, this is my own view on this, but I expect to see unemployment get down to about 5% and dip below that later this year, early next year. I expect to see continuing signs that inflation is stabilized and maybe underlying inflation is moving back towards 2%. So in that context, zero interest rates and the extraordinary accommodation we have in place, I don't think is necessary to continue to support growth. So I do see the time to start raising rates in the near future from my perspective, but we'll go watch the data and obviously listen to all the information that I hear from my colleagues and from all my contacts in the community.